If you talk about the blockchain space, yes, I don't see that a lot of them are AI first, to be quite honest with you. Many of them use just AI as a buzzword because they have all been created, a while ago. So they are not basically newcomers building from A to Z. I know that there is a lot of critics on OpenAI and other Anthropic and others that they're not profitable. But what we see on the ground is that some of these companies are becoming profitable.
What's a moat for an AI startup now?
Yeah, and that's a good question.
That was Dušan Stojanović, general partner at True Global Ventures. I spoke with Dušan about the intersection of AI and blockchain and how recent events are reshaping his ideas about how to invest in startups. We also talked about how TGV itself is using AI, where it's finding liquidity for its portfolio companies, and perhaps tokenizing its own funds. My name is James DiBiasio, and this is the JDB Report. Dušan Stojanović from True Global Ventures, welcome to the JDB Report.
Thank you, James.
Great for you to join me. You are a venture capitalist. You're a general partner at TGV. I gather from your background that you're speaking to me today from Singapore.
That is correct. I've been here now for, just about 12 years.
Okay.
And before that, I lived in Sweden and France. Sweden, where I'm originally from, and France, where I had my latest startup before being a venture capitalist.
Okay, very good. Well, and I know you also spent a lot of time in the US, so I think we're going to have a globe-trotting half hour here talking about the themes that, as an investor, you're most focused on. So before this interview, we had a call a little while ago, and at that point, you were looking at stablecoins, tokenization of funds or private market opportunities, and then AI and the way that it's a productivity tool being used in an increasing number of ways. Of those three, speaking now in March of 2026, do you have a favorite?
Well, I think it's more the mix of the two. So what we spoke about, a couple of months ago was stable coins, and then we spoke about AI almost as separate things.
Mm-hmm.
And now what we really see is that agentic AI can be used in conjunction with stable coins. So basically preparing everything except the payment in stablecoin itself with agentic AI. So now what we're seeing is, really, I think we had this thesis way back in 2018, the intersection between blockchain and AI, and we're really seeing it now. So I think that's going to be the big thing to 2025, actually, agentic AI with stablecoins and other intersections between AI and blockchain.
Paint me a picture, Dušan. How does it, give me a story about how that intersection could look, and which players in that value chain are most likely to benefit?
I mean, it's very simple. I mean, it doesn't matter if it's stablecoin or if it's, just your normal payment that you do for your card or any other PayPal solution. The agentic AI can probably, solve most of preparing it for why do you want to do the payment and prepare everything in order. And then the authorization itself is probably still going to be human for a while, at least, because I don't see yet that humans are ready to kind of leave that last trigger, which is basically clicking on the button, which is basically execute the transaction. But everything before that could definitely be prepared by agentic AI. We do believe that, you still want to keep human in the loop. For instance, we have one company called Ledger, which is a device that you basically, I would simplify saying that it's kind of a two-factor authentication with self-custody, where you basically have a physical device which helps you protect your digital assets. And probably even in the future, you want to keep that kind of, authentication, identification, validation of the payment still in human hands. So think about preparing everything, the trade in stable coins or other, and then still keeping some kind of security solution and human in the loop to execute it. that's really what I believe is going to come big time in 2025. And it's already there. As I mentioned, Ledger, one of our portfolio companies, is already in there and actually have already done many different prototypes of how it can work. And it's out there on OpenClaw and other solutions.
Yeah. Okay. Things are moving so fast. You keep saying that that's the story for 2025. It's already 26. We're in the year of
Oh,
the horse.
sorry. You're right. You're right. It's 2026. Sorry about that.
I know.
Yeah.
It does feel though like that time is moving a lot faster these days.
But
Maybe.
it's true though that we started to see we started to actually have ideas about how agentic AI could work already in May 2024 when we had a huge competition in San Mateo, and we looked into it in many times in 2025 and started to look into it. But I think what we are seeing, except that I made a false year, is that it's actually really happening on the ground in 2026. So it's
Yeah.
not like predicting a mega trend. It's actually happening now. And
Yeah.
I think the trigger for this is really OpenClaw and what was going on in the open source community there in the beginning of January when it really and in February when it really got huge traction.
With OpenClaw, the impact on a lot of SaaS companies was immediate and severe. And I've been speaking to a number of other VCs about the way they think about this. Uh, what's your take on when you look at your own portfolio? Do you say, well, maybe we need to change a few things, or are you worried about valuations in some part of the portfolio declining while others will expand? Just how is that changing the mix for venture capital investors like you?
Yeah, first of all, I do think it's a big aha moment. ChatGPT was obviously with OpenAI a big aha moment a couple of years ago for the whole AI community. Then DeepSeek came in terms of open source, and was a big aha moment as well for AI. And then now agentic AI and OpenClaw is, as big as the other two, or maybe even bigger, because actually the other two did not kind of get this anxiety of SaaS enterprise valuations as it is now. So there is a lot of anxiety, and I'm wondering if that anxiety it's maybe accelerating with agentic AI and OpenClaw. Maybe it has been there for a while, but now people go, oh, actually, this will have an impact on my traditional software business.
Yeah.
So yes, I do think that some of our companies will be even more winners out of this. Some might struggle. I would say all those companies that have built themselves as AI first. We have one company called Present, which basically is doing business communication expressively for healthcare. They have an enormous data moat in terms of what they've done. And there is a piece of compliance there, which is enormous and important. So I would say that they actually benefit from that. We have another company called Cinch, also in the Bay Area, which is actually preparing tax, both for medium-sized companies and individuals running medium-sized companies. They are also built as AI first. I think they are also benefiting. Those that will probably have, to adapt, or those that are not AI first, but have a piece of AI in their models. The theme a little bit in 24 and 25 was, well, AI is everything now, so who doesn't do AI?
Right.
Well, it's not actually good enough that you only use AI maybe for customer experience or customer service. You need to actually be AI first from A to Z.
Yeah,
So
a lot of
those
it's
companies that are only partly using it, they will struggle. They
yeah.
will definitely struggle.
Yeah, I mean, a lot of it often seems just like the early versions were just dashboards and front end interfaces with customers, but often the plumbing was not being updated in any way.
Exactly. And we do see that in some of our portfolio companies, and yeah, they all have their own plans now how to accelerate that. So
But
for
how do
some
you,
of them, it will be challenging.
yeah, so Dušan, how do you kind of evaluate that? Because I'm sure uh, every startup now is saying that they're AI first or AI native or AI this or that. I'm sure every pitch deck probably is, has these buzzwords everywhere. And even larger companies are probably also now retrograde saying, well, we are now like an AI company. So I remember when all the banks, 7 or 8 years ago were like, oh, we're actually just fintechs with a banking license, right? We look at here's the photo of our team with wearing hoodies. Um, how do you differentiate between what really is AI first and what is marketing?
I think it's very simple. I mean, is their whole infrastructure built on AI or not? Or do they have a small language model that they built or not? Are they building it on a combination of data mode, small language model, and large language models? I mean, if the whole infrastructure is built in the right way, it's like
Yeah.
if we take the analogy in the old days of the dot-com boom, and everybody wanted to say that they're an internet company because they have a website. Well, that's not a pure internet company. Like every function needs to be relied on internet and not just your marketing page. So it's the same analogy now. It needs to be the whole company needs to build from on AI from A to Z.
But what does that mean in terms of, let's say, if we're looking at stable coins or fintechs, which is an area where I spend most of
Yeah.
my time, they still have issues around, they've got to be compliant. They've got a lot of regulation and reporting requirements. They've got to do risk management. They've got to do product development. So when you're thinking about a stablecoin issuer, for example, or something like that, or if you talk about, a marketplace for private capital investing, when you say they need to be AI down, from top to bottom, what does that look like versus some of these kind of hard, legal or market requirements?
Yeah, so yeah, I mean, if you talk about the blockchain space, yes, I don't see that a lot of them are AI first, to be quite honest with you. Many of them use just AI as a buzzword because they have all been created, a while ago. So they are not basically newcomers building from A to Z. But that's where I still think there is an opportunity to build those companies actually from A to Z. So many are just using it as a buzzword. Where I see AI first coming is more on the, like I mentioned, the companies that are actually AI companies from the very beginning. If it is like the example I gave in healthcare, the example I gave in tax, those are built from A to Z. If you look at those that are on the blockchain side, I still want to see those and want to invest into those that are building the infrastructure from scratch correctly.
When you talk about an AI-based company, as you've explained with those two examples, um, AI comes with its own baggage, right? Every technology reflects human flaws. So the hallucinations and some of the unreliability, which continues to be basically a feature, not a bug of LLMs. Uh, how do companies and how, when you're evaluating them, how do they risk manage the technology itself?
Um, well, in terms of valuations, I would say, generally speaking, um, and we've seen that we look at multiples of ARR still,
Mhm.
although it could be old-fashioned to look at it, but it's a better gauge than nothing. And I would say that there's a fairly big premium for if it's AI first,
Mhm.
and I would say there is still a premium for if it's Californian based. Why? Because a lot of the Anthropic, OpenAI, many others were originally founded there. So I would definitely say that California is the AI capital of the world, and actually not the US in its largest remark there, but actually it's still fairly
Silicon Valley.
regional
Yeah.
there. And I would say that what we see there is that there is a premium if it's AI first. It's a premium for if it is based there because they have access to more funding, but also access to, honestly, more mature clients that they can actually attract as well. So I do think that there is a premium there, and that's actually why our sixth fund, we have decided to have a very Californian-centric strategy.
Mhm.
So I think we have about 9 people there now working with us and for us, on top of everybody else that we have in our other cities. As you remember, it's Singapore, Hong Kong, Dubai, Paris, London, Stockholm, and New York that we have. So that's really, and I think many people have done similar conclusions that that's really where it's happening. And if the valuations are slightly higher, so be it, because actually the growth rates are also slightly higher. And what I would like to say, what we have seen, which we haven't seen before, is that actually some of these companies become profitable way earlier. I know that there is a lot of critics on OpenAI and other Anthropic and others that they're not profitable. But what we see on the ground is that some of these companies are becoming profitable. Why? Because the gain that they give to the customers is enormous, and the customers are ready to pay quite a lot for that. So that is something, and then I would say that somehow justifies the slightly higher valuations, because the path to profitability is a little bit clearer than it was before, when you would only invest in traditional SaaS enterprise.
What's a moat for an AI startup now?
Yeah, and that's a good question.
Because I can prompt my way to some kind of solution. I could probably, you know, if I worked in a company, whether it's a small company or a big one, I could probably focus my team to come up with, you know, a lot of internal solutions. You know, so what constitutes a moat now?
Yeah, I mean, it is a little bit the same story as before. You need to have the data moat, but the data moat becomes, you know, even more extreme than ever. You know, what the data moat needs to be. What, you know, for instance, to give you a concrete example, you saw probably Anthropic's latest version of Claude, which also included a module on legal. And suddenly some of these wrap-ups that are in that space, like Harvey and also Legora, you know, started to question themselves, I would guess, you know, do they offer enough value, or is actually Anthropic and Claude and the latest module actually disrupting them? And even more so, maybe what was Clover's and Nexus, which is also in the legal space. So especially the last two share prices went pretty much down with the launch of Anthropic Claude. Whereas one of our companies, which does arbitration, which is very, very specialized and does it globally, we didn't see any impact at all, just actually positive impact. Why? Because it's even more, how would I put it, domain specific, even more niche specific into a specific user case and specific data moat that they have. So I think the data moats are going to be even more extreme in terms of what you need to do in order to have a fair, sustainable competitive advantage. Now, in the long run, you could say Anthropic can, you know, disrupt all of that, even, you know, arbitration AI, but not right now. Not right now. So that's really where we see, and so the more extreme the kind of niche domain specific strategy is in terms of a data moat, the better.
Right. And that, what kind of sizes are you able to play at, or other VCs, if you're not, you know, Andreessen or Sequoia, where you've got early entry into Anthropic and OpenAI and so on. Where do you play? What's the ticket size that you're able to muster where it makes a difference? And are these companies, you know, do they have the potential to scale?
So we have decided to go into what we call, you know, very specialized, verticalized AI, as you know, I think the examples I've given with business communication, healthcare, tax preparation, and legal arbitration. So we call it FutureWorks. And there are kind of 4 or 5 segments there. One, which is kind of the back office piece, which I kind of mentioned a little bit, legal, tax, KYC, compliance, all the kind of boring stuff. We love that stuff. So that's one area. Professional services is there as well. The kind of middle part, which is what I mentioned with the example present, business communication, revenue AI, marketing, sales AI, and then coding and cybersecurity. Cybersecurity I indirectly mentioned also with Ledger. Coding is already done, by the way, so I'm not sure we're going to see much more coding, but we can still see some coding in some domain-specific areas. Coding has probably been the area where, you know, AI has come the furthest in terms of really disrupting the traditional way of writing software. So that's the kind of top 3 areas we look at, and we look into companies there. Our funds have always been around 100 to 200 million. And then as soon as we do exits, we set up a new fund. We are among the top 1% in terms of performance. So we have a very strong performance, but we have decided to stay agile and small, like 100 to 200 million dollar funds. And as soon as we do exits, we create a new one, maximum 15 investments, high touch on those companies that we join. And we actually enable ourselves as well. What does it mean in terms of ticket sizes? Yeah, we can invest into a company up to 10 million. We do pre-seed, sorry, not pre-seed, we do seed and A.
Mhm.
That's really where we focused. Again, very Californian-centric. You mentioned Andreessen and Accel and Sequoia. It's funny, right? They go in and scout, and they go in very, very early, actually, nowadays as well.
Right.
So even pre-seed companies. So in two of the companies that we are looking to invest into, they have actually invested before us. They've invested in a pre-seed stage. But it's more their kind of scouting arms that
Right.
have done that.
Yeah, because they can
So
afford it. But at the same time, how do you see the VC landscape changing? Because you've got these giants that they, on the one hand, they can afford to go into your space or even below. At the
yeah,
same time, they're building, they're buying insurance companies. They've got, massive, they're doing
yeah,
kind of
roll-ups
evergreen
and everything.
funds and roll up,
Yeah.
yeah, and investing all the way into the public market. So where for you as a mid-sized player in the VC world, do you feel you're getting squeezed a bit by what's happening at the top layer?
Actually, not at all. Because they're investing so many companies in so many different sectors that they've lost that agility that we have. So the kind of two reasons why entrepreneurs love us. Number one, I think you know this. We have created 73 events in the last 10 years. We have 16,000 relationships. They don't just sit in CRM. We keep maintaining them. We're on a constant roadshow with our portfolio companies, including those deep relationships, which actually are meetings, physical meetings. And those deep relationships, AI is not going to take that away, at least not right now. So that's where we play. And when we explain to a portfolio company that, we have potentially 16,000 customers for you in the B2B space, and you have at least 7 touch points per year with us, they love it. That's number one. The number two, Sequoia doesn't exist as a global partnership anymore. Today, it's Sequoia US, Sequoia India, Sequoia China have been rebranded. They're separate in terms of functionality. Andreessen just took home their GP partners from Europe. And GGV has also split into an Asian and an American partnership with completely different brands. So if you want to have one source of contact, which really helps you truly globally, not only into the domestic US market, but also into Asia, but also into Europe, and vice versa, by the way, then that's where we play. That's the niche where we play. And for an ambitious entrepreneur, especially California, who maybe has done 2 or 3 companies before, knows that international is tough, or somebody who's come into California with a global mindset, did their universities and did their startups there, who have a global mindset, they know that international is tough. That's really where we come in. So we need to be as good, if not better, than the local VCs in California. And on top of that, be able to show the international piece that they don't have. That's how we compete.
Yeah. You've talked about looking at companies that are AI first, top to bottom. How does that apply to your own business?
So that is actually very interesting. So one thing that we have decided to do is to take the M&A function completely in-house and completely AI enable it. And we have done a lot of M&A internally to help our portfolio companies. So we've done it with our entrepreneurs to basically sell or merge the companies. We've done 8 transactions since inception with no investment banks involved. And now what we've decided to do is actually to even look for a person who is horizontally responsible for all M&A. Until now, it's been the GPs who've been driving that, and basically AI enabling this. What does that mean? It means using agentic AI. For instance, my company X needs a company Y with those kind of volumes. Revenue numbers are hard to find. We search that with agentic AI tool 1. Then out of my database of 16,000 relationships, do I know any of those 35 companies that I identified? Do I know people on the board? Agentic AI prompt 2, agentic AI prompt 3, saying between my company and the targeted company, what are the synergies according to Gemini, OpenAI, and others? Agentic AI prompt 4, can you put those synergies together to me, put it together with the contact that I know well on the board, and put it in my draft outbox. As you can see, you can reduce a lot of the research piece that actually investment banks do, and then spend more time on the relationships. That's one of the functionalities we're looking at. Obviously, we're looking at due diligence and using way more AI there, looking through a lot of contracts and looking at red flags there. Tools like that have been around. And deal sourcing at the later stage, Series B and C, also is possible to do. So these are 3 elements where we are using more AI in our own firm. I would say, though, that right now, though, that doesn't mean that we are recruiting less people, because all those relationships need to, come in, and we need to have them. And they're not just going to come on their own.
Right.
So we are still recruiting, but I do believe that in a couple of years, we will be much, much leaner and be able to have much, much larger AUM with less people, or not less people, with the same amount of people that we're recruiting today.
Right. You sit in Singapore. What's the geopolitics looking like now for global VCs? You talked about all these other larger groups that have split off their Asia or China businesses from the US. You're still trying to play both sides of that, but how easy is that to get a China, either a China name invested by US investors or vice versa? And if you're California centric on this fund, do China AI startups play much of a role in your portfolio?
No, they don't. I did mention Hong Kong. I think Hong Kong is still a little bit an exception, what people can do there from a regulatory point of view. So we're still there. But mainland, the rest of China, we don't play. But we do play. We've been for a decade in the 8 cities I mentioned: Hong Kong, Singapore, Dubai, Paris, London, Stockholm, New York, and San Francisco. And yeah, those relationships we have there, before going, even, going into kind of an IC committee with potential companies that we invest into California, we introduce them to those global potential relationships we have. And yeah, they love it. Because it's linked to the ambition level of the entrepreneur. You can talk about geopolitics forever, but the ambition level of the best entrepreneurs in the world is still to build a global company. They are not going to be happy just to build a domestic US company, or just an Asian company, or just a European company. The ambition level is much, much higher than that. And that's why we continue to play there. And that's why we win deals.
Yeah. And for the exit, do your liquidity events tend to be more, you talked about M&A earlier, is that still the main route, or are you looking for more IPOs, and does that have to still be primarily a US story?
So yeah, we do have 2 of our companies that, have the size now to, be IPO-able. And they are actually both, although they are not originally from the US, they're both looking for listing on NASDAQ. Mm-hmm. I think the liquidity and the amount of capital that NASDAQ can actually bring together is still unheard of compared to anywhere else in the world. So that is still, at least when it comes to tech. So that's still the number one route, at least for our entrepreneurs. We brought them actually go. We had one business review in May last year. We brought all 27 companies to NASDAQ as a visit just to get them inspired. And they all loved it. Mm. So I think from an ultimate IPO, that's really pretty much NASDAQ. But, it's not, in a portfolio of 15, 20 companies, it will only be 2, maximum 3 that can go that route. Right. So the main activity, as alluded earlier to, will be M&A and trade sales.
And last question for you, Dušan, and thanks so much for your time. Wanted to ask about your own. We talked at one point last year about tokenization of funds, illiquid private funds that can then be tokenized. And is that something that you think you'll do with TGV? Any of your funds there? Is that an option?
Yes, I mean, absolutely. It is a big thing. Players like Securitize and Republic have showed the path in the US with slightly different business model, but they are actually doing it also on a global scale. So definitely tokenizing shares, tokenizing funds has become, huge last year. Less so maybe for VCs. Mm-hmm. So the funds that I'm talking about are later stage or mutual funds or other kind of funds than VC funds. So tokenized VC funds is still not that many who have done. We have been looking into this space actually since 2018. So one of the first tokenized funds was called Spice VC, which was done by Talia Eliassi, who is one of our investors, and now in our 6th fund. And we were very inspired what he did in 2015-16, which was the first tokenized fund. We've actually pretty good track record, both from a TVPI and DPI point of view. And so we've always been looking at it. Yes, to answer your question, we think the timing to look into that is good this year. And we will probably not do it during the investment period. We will probably do it after the investment period. We still believe that during the investment period, focus should be on growth and not basically thinking about how you can create liquidity in the fund that you set up. But after the investment period, when we have deployed and grown the companies enough, then we believe that there is a way to tokenize the fund. To start with, among our LPs, we have about 240 LPs, but also inviting, new participants. So that we're super excited about that. But as mentioned, I still don't believe that in an early stage VC should be done during the investment period.
Right. Why do it though? What's the benefit of tokenization? Like why, as the GP, what do you get out of it?
Yeah, I mean, I ask some of our mentors for that, and they go like, Dušan, why do you want to do this? Like, just focus on DPI, solve problems. Like, why tokenizing? I think it is a little bit of like an insurance that those LPs who invest into you, they will know that after the investment period, they can potentially sell off in a simple way to give them liquidity just in case something happens with them. So it's more like an insurance.
Right. Because we've seen this past several months, the wheels coming off of a few private credit funds, gating by Blue Owl, issues with one of the BlackRock funds and so on. So I think there's been are investors kind of rethinking this concept of hybrid liquidity or trying to make an illiquid investment more liquid? Is this a good idea?
I mean, I would never IPO a VC fund, put it this way, right? Because that's ultimate liquidity. I just think it's not the right thing. I do think, that if you tell LPs that after the investment period, right now, GPs just don't want to deal with liquidity demands from LPs because it's too time consuming. If you can reduce that time with the new technology and legal structures which these players offer in terms of tokenizing the funds, and it becomes so simple for the GP to offer it, then why not? And then, potentially the LPs are going to put in a little bit higher amounts into your fund because they know that this liquidity will happen after the investment period. I think for us, it's actually a very simple tool. We don't believe it's going to change the world, but we do believe that it's going to help a little bit for the general asset class.
Great. Dušan Stojanović, thank you so much for joining me on the JDB Report.
Thank you very much, Jay.
Thanks for watching, and I hope you really enjoyed this program, and I would love to hear from you. Please leave a comment about what you think about Dušan's views on AI and the intersection with blockchain.